Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So glad you could be with us this Tuesday morning, April 20th, 2021. Here at Forex Smart Trade, our mission is to help make you the best version of yourself. And we do that by helping you become financially independent by teaching you how to currency trade with our super accurate proprietary trading tools and our best in the business one-on-one training. And we are so confident in our ability to train you to be successful that we offer a guarantee, and that guarantee is that we will let you trade with company money once you've been trained, with the eventual opportunity to trade up to $100,000 of company money and keep 80% of what you make. So with that, let's get going on this trade. I use the trading signal that I primarily like. There are a dozen different trading signals, and as you get trained, you will come up with a trading plan that focuses in on the one that is most suitable to you. But the one I like is something called the 10-point trade, and then toward the top of the hour, we'll use a different signal called the thick orange line trade to see if we can catch a little bit of a scalp trade at the top of the hour. So with that, let us go. We start the day with oops, where is it here? We start the day with oops, we don't need this guy. With the disclosure.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
All right. In addition to this session, the company offers a number of other live trading sessions. The yellow calendar here is for light members. The green and purple calendar are for regular members. I would encourage you to attend as many as possible. Until you are consistently doing 10 pips a day. Once you start to do 10 pips a day consistently, there is kind of a less of a need to attend. Although, again, questions on the indicators, you can get that answered back to the basics. And then also, if you're in the on it, Dale is very, very good at. He knows these indicators backwards and forwards, and any sort of adjustment you'd want to make, he knows that. When I trade using a little checklist or routine, almost like a pilot's checklist before they get in the plane. Checklists have been shown to be very effective in helping us be efficient and effective in what we're doing. So first thing is I want to just make sure my charts are turned on and current. I check up here on the top left. This is green. That means I'm connected to the internet. The bottom right is telling me that the chart is current, and then we will also check the CoinEx. This is a demo account, and I can see the prices are moving here, so that is current. review of yesterday. Last week was one of the rare weeks where we couldn't find a trade. We went through 18 different charts with 2 different signals, and there was nada. So there is nothing to review. It is good habit to review your trades at the end of the day or the beginning of the next day to figure out which trades didn't go as they were supposed to, so that you can take corrective action to kind of refine your skill. It's a little bit of an art and a little bit of a science. So seeing those nuances helps you kind of refine the skill. I find it is good practice to take, or it used to be good practice to take a screenshot so that you could see exactly what you were looking at when you took the trade. You can also scroll back to the time. Screenshots easier for me. We are technical traders. Being technical traders, we do not like to trade when there's news. News impacts the currency pair in a way that is not predictable. So with that, we want to stay away from news events that may impact the currency. And to do that, we look at Forex Factory. Forex Factory breaks down the day's upcoming news events, and it categorizes them into 3 groups. Yellow is low impact, orange is medium impact, and red is high impact. If there is a red event coming up, I want to stay out of that currency pair at least 2 hours beforehand. I don't want to be holding that pair because I don't know how the news is going to affect it, and I'm not very good at predicting it, whereas our indicators are very good at predicting the price action movement. So today we don't have anything until tonight at 6:45 Eastern, where New Zealand is putting out their CPI numbers, and at 9:30 tonight, which is tomorrow in Australia, they're announcing their retail sales numbers. So we've got pretty clear sailing here. So now we will go into our technical analysis. So on the technical analysis, I've got what I call these the composite charts. It's 6 different currency pairs, all on a 60-minute chart. And I start in the middle section. The middle section is called the majors and minors. I start with the middle section, and I am looking for situations where these lines, the red and green are the majors, the black and gray are the minors, where we are oversold. That is when we're underneath the red line, or overbought, or over the blue line. And when they are below the red line, when it's oversold, that is the beginning of a buy signal. And I'm looking for certain characteristics to happen that tells me the timing is good for a buy. And right now, I want to have all the lines pointing up and double crossed. Right now, the minors, the black and the gray, have started to point up, and they're starting to double cross. The gray's kind of crossed over the black here. But the majors are still going down. I want everybody turned up. Had we caught this, I don't know, 3 hours ago, we would have had a nice 34 pip run. So I got nothing. I move on to the next. Euro dollar oversold. Everybody's going down, so nothing. Pound dollar oversold. These are going sideways. I do have the double cross, or I got a slight double cross, and it just disappeared now. But I don't like sideways. So sideways, we're going to stay out of it. I want it definitely committed. We did have it going up. The green line here was going up sharply, and then it kinked right here. Kinks in the line where the slope decreases are not good. So nothing there. U.S. Canadian, and because all of these pairs are U.S., if we don't have one, usually we won't have any of them, but let's go ahead and take a look. U.S. Canadian dollar overbought. Minors have started to turn, but majors are still going up. We have what we have here. We have what I call the duck bill. Here's the bill. Here's his face, and you can put an eye here. Usually this means that there's more of a push. There's going to be a continued push up. I am going to, we don't like to continue to, we don't like to take a buy trade usually when the market's overbought, because we don't know how much more is left in the move. If we can catch it down here when the cross comes over, then we can get a nice move. And as you could see here, had we caught it when it crossed over here, there was a 32 pip move there. Dollar Swiss franc overbought. Majors are coming down, minors are coming down. I've got the double cross red over and black over. So I got 3 points here. I have 3 points here. I'm going to go to the next section of the chart and see if that is consistent with what I'm seeing here. The goal is if all the 3 indicators are giving me a consistent signal, that increases the probability that I'm going to have a good trade. And the trick is just waiting till I see that signal. So I've got 3 points here. So now I'm going to go up to the TNTs, and I'm going to count how many lines are consistent with this signal. And the orange lines are directional. So when orange is going down, that means it's consistent with this down signal. And the blue are inversely related. So when blue is going down, that means up. So I've got one orange line going down, one orange line going up. I've got one blue line going down, which means up, and one going up, which means down. So I only have 2 of the 4 consistent with what I'm seeing here. Only 2 of the 4. I want a minimum of 3 of the 4 or 4 of the 4. So since I don't have enough of the signals telling me that here, or this is starting to come down a little bit, the thin orange. We're going to pass. Let's go to USD, JPY. All right, so we're overbought. Even though the miners have kind of gone into the channel and are halfway, I am not as concerned about that. The majors are still back here ready to go into the channel. So I've got 3 points here. 1 oversold, 2 the black and gray are going down and they're crossed. 3 the minors or majors are going down with the red on top. So 3 points here. The 2 orange lines up in the TNTs are going down. The dotted blue is going down, which means up, but the thick blue is going up, which means down. So I've got 3 of the 4 here. Normally, I would expect the dotted blue to be going up and the thick blue to have not turned yet, because this is a lagging indicator. So this usually turns at the very end. But I do have 3 of the 4 here. And looking at my pressure, I have up pressure, but I have red on top. So with red on top, that is a point. And then also the green line here has kinked. So it is going down. I like that also. So I've got 3 points here, 3 points here, 1 point here. So I've got 7 points. I need a minimum of 7 points to take this trade. When I see the trade, the next thing I want to do then is I want to get a little bit more detail. So if we look at my my trade routine, I see the trade. So now I want to know where support and resistance are. I want to know what the trend is. I want to know where the channels are. So to do that, I am going to open up, let's see, USD JPY. Haven't looked at that, so what I'm going to do is I'm going to just take our current USD and I am going to change it into a USD JPY. And I'm just going to rename it. Let's see, USD JPY. All right, so first thing is I want to take a look at the support and resistance. So let us get this so that it looks, we can deal with it. On a chart that I normally trade, I have my support and resistance already drawn on it. On a chart that I don't normally trade, I don't. So let's put a little support and resistance in it. Support and resistance is spots where the candles seem to naturally stop. So I'm seeing some stopping in here, over here, right in here, right in here. The market seems to greatly respect these stopping spots. So I want to know where they are so I can incorporate them into my analysis as to how many pips I want to take on the trade. So we're going to try to get a couple above and a couple below. So we stopped right in here. We also stopped in here. And let's see if we can get one more above. We kind of stopped in here, like right in here a little bit, in here, in here, in here. And now, so we've got our support and resistance and the channels. What is the trend? For the last 2 weeks, we're trading into a downtrend. The trend is going to help me figure out how many pips I'm going to take. So if I'm taking a buy, if I have a buy signal on a downtrend, I'm going to take less pips than I might if I'm trading, taking a sell trade into a downtrend. I don't want to trade against the trend. So right now, we're trading into a downtrend the last couple of weeks. And let's go back and I can just look at what we're doing at here a little bit. And we're just above the resistance line. So let's go back and see. So we've got a sell signal, but I'm sitting on a resistance line. So I really want it to break this resistance line before I take the trade. But let's see what kind of confirmation I have for this trade from the other indicators. So this is showing me 6 different time periods for the US JPY. So on the 2-hour chart, my majors and minors overbought, going down, double crossed. So that's good. Pressure is up with green on top. My green line is kinked. I like that. It hasn't crossed like it has here, but I would expect that it will cross in a little bit. So I like what I see on the majors and minors, and the pressure, I believe, will get there. On the 4-hour chart, overbought. Minors have started to have come down. The majors haven't committed yet. So again, I like that we're overbought. When we're overbought, it will generally come down. And then here I've got sideways pressure with green on top. Sideways pressure typically indicates retracement. Retracement would mean that this current candle will copy the previous candle. So if this were to copy the previous candle, I've got 22 pips here, 23 pips, and then on the day chart, we're oversold, and it's showing us that we're going up, but we do have down pressure. This is a little the day chart is contradictory, but when I'm trading off of a 60-minute chart on the trade, I can ignore the day chart right now because I'm only going to be looking for somewhere between 5 and 30 pips. 30 minutes, we're in the middle of the channel, and I get sideways pressure with red on top. And on the 2.5 minutes, I've got a little push up here, and I'm seeing that little push up here because the green line on the 30-minute is going up and down a little bit. I like this trade, but I don't like it as a current as a market buy, because we need to break this resistance. So maybe if it breaks this line, one oh eight 301, then we could maybe go to 17 pips. So if it comes down and breaks this resistance line and gets to 108 301, we could take that trade and we could run it down to 108 113.8. So let's go ahead and do that. So that was USD JPY, USG JPY. My lot size is going to be a function of my account size. My account size is on this demo account $8,700. So I'm going to take a 0.87 lot size. So basically, I'm just moving this decimal place over 4 spots to take the trade, and I am going to go ahead and take it. No, we don't want to market sell. So we're going to go 0.87. If I click USD JPY, I've got the right symbol. So instead of market order, I'm going to go to pending order. Pending order. So this is going to be a sell stop. A sell stop. So we're going to catch it. You can kind of think of it as the bus stop. We're going to catch it on the way down. It's going to stop for us. We're going to hop on, and then we're going to ride it. And we said we were going to get in at 108 301. 108.301, and we were going to get out at 108 13.8. 108 13.8. 108 13.8, and then we just also need our stop loss. So if we're going to get in here, I am going to put a stop loss. I want to be 2 support and resistances away, so I'm going to come up here. Oops. What do we got here? I'm going to put a stop loss up here, 108,692. So it has to break this and it has to break this. And I've got a little bit extra to cover the peak through here. So 108,692. 108.692. Click place, and it records it down here. Now, let's see. Let's go back to the chart a second. If it is time, it's almost 7. If this doesn't close by 1 p.m. Eastern time, cancel it. If it doesn't close by 1 p.m. Eastern time, cancel it. And the way you would cancel is you just go over here and click the X. If it does engage, let it do its thing. It is within 10 pips of engaging, so we'll let it do its thing. Let's see. Now we're going to use we're approaching the top of the hour, so we're going to take a look at the thick orange line trade. The thick orange line trade is, I'm just looking at what this number is on the thick orange line. This is a scaled number. It runs between 0 when it's as high as it can go to minus 100 when it's as low as it can go. When it is at minus 100, that is telling us the indicator doesn't believe there's any more down in the movement. When it's telling us that there's no more down in the movement, that's the time for a buy. Now, we want to have, again, we want to increase our accuracy. And to increase our accuracy, we want something that confirms this number. And it doesn't have to be exactly minus 100 or 0. It can be within 10 points. So minus 94 is within 10 points. So if I see this, I am going to look down here to see, do my majors and minors agree with it? And they do. They are well below the red line. And I want to take this when there's like less than 5 minutes left in the top of the hour, because I want to get a little bit of a bounce. So we have the signal here. Euro USD minus 100. All the lines are below. Minus 67, no. Minus 12, no. Minus 47, no. Minus 88 is close, but the lines are up here versus down here. So on both the Australian US dollar and the Euro US dollar, we have the signal. I like this signal a little bit better than this signal. It's been down at 100 for the last 2 hours. Last hour was at 100, and it came down another 12 pips. Pressure is basically the same, although we usually don't take the pressure. I like this setup because the miners have already started to turn. So let's go ahead and take a 5 pip buy on the Australian US dollar. So I'm going to open up my chart, AUD USD, new order. Lot size is going to be the same. It's going to be a market buy. Records it up here. I'm going to go to modify. I right click on the point. This we always know is good for 5 pips. So 5 pips equals 50 points. And we're going to use a 4-to-1 stop loss, which would make the stop loss 20 pips or 200 points. And I just want to make sure I get the full 5 pips. So if I get in at 77.68, I want to go to 77.73. All right, and we're at 77.73, so that's good. So I'm going to pop that in there. And we should, some traders on this trade like to see that we'll wait till the actual top of the hour when the new candle starts, and they want to see this number jump by at least 10. And it did, because we were at 93 last hour. If I go forward an hour, it jumped to 70, 78. I'm happy if I just see these down here below, knowing that it's going to come back up. So, and I would expect this to close in the next hour. All right, so we took 2 trades today. One thick orange line trade on the Australian US dollar. Another a pending sell trade, sell stop on the USD JPY. Let's see if we got any questions. AUD USD was a sell. AUD USD was a sell. Where'd you see that? When these lines are down here, I don't want to take a sell on AUD USD. This is the beginning of a buy, and right now with this signal, when we had that signal last hour, we were going to try to get a little rebound off of it and get a quick scalp. It's softening up when it's down here. Okay, gang, I appreciate you being here. We're here to help. Just reach out if you need some, and have a rest of the good week. Thanks so much. See you next week. Bye-bye.